Brait is an investment holding company with stakes in Steinhoff, Premier Foods, New Look, Virgin, Active and Iceland.
Right, so it's in transition. In fact, that Steinhoff stake has been moved out of the portfolio, and that's a process whereby their partner in this whole enterprise, Christo Visa, one of South Africa's best-known investors, engineered the listing of Steinhoff in Europe and
absolutely right. It
tremendous value unlock in that process.
Market cap 77.8 billion rand, PE ratio of 1.9 and no dividend yield at this stage. This has been a good performer. I haven't checked in on the numbers of late, Rowan?
Yes, certainly. I think the one-year performance has been excellent, really. These guys have been phenomenal financial engineers, really undertaking deals, taking their private equity background under the leadership of John Noddy as the management team, and really managing to extract a lot of value from the underlying transactions. The Pepkor transaction was really their bellwether transaction, where they bought that out from the underlying private equity fund, leveraged that into Steinhoff, sold the Steinhoff shares, took the proceeds, and then deployed those into the UK retail market in the form of New Look, which is now really the anchor asset in the portfolio. It's around 50% of the NAV.
And Virgin Active being a more recent transaction.
Yeah. So, I mean, that Pepkor to Steinhoff and unblocking of value was like an epic deal with multiple massive returns. I guess the question now is whether the team can repeat a trick like that. New Look, of course, is great. It's fast fashion.
But that exposure to the UK consumer is obviously now in the spotlight.
Yeah. And, you know, it's not as though that's an uncompetitive space. There's lots of people active in that space, in Inditex, which owns Zara, and a whole slew of European operators. But I think they bought that asset well, and they're putting their shoulders to the grindstone. I think the Virgin Active asset is also very exciting. I mean, clearly that sort of exercise-driven culture is here to stay. And it's got assets here in South Africa, but also in Europe and elsewhere in the world. So that's also exciting.
So if you were going to take a stake in Brait, you're basically going for exposure to the UK consumer now, to the gym environment, so to speak. I know that they are not only addressing luxury consumers in the gym space, but also going into the lower LSM and expanding, deepening that business model. What other elements would you be exposed to?
They've also got Iceland Foods, which is another sort of frozen food, pre-packaged food retailer in the UK. That's been a bit under a bit more pressure and a bit more lackluster, but is again exposed to that UK more value-oriented consumer. And then Premier Foods, which is another food group as well, which has actually been performing quite nicely, branded food group focused on South Africa. So it's a reasonable mix, I guess, more of consumer-driven businesses. So if you're bullish on South African and UK consumers, it is a very attractive opportunity.
It's quite difficult to be bullish on South African consumers, may I point out, or am I living in a different environment to you?
I mean, I think the end of the market they're in is probably where you want to be. So it also brings you the foreign earnings. So that's been a plus. As it's tracked recently, its share price
Let's
bouncing.
look at that share price.
First of all, it broke its guts going higher there in 2015, but it's now since kind of in a range between 140, 150 and 160, where it's sort of been resting for a while, and it's been moving with the currency as an interpretation of its foreign earnings ability.
So where are we in relation to NAV?
Yeah, so I think that Paul made a salient point there, because the valuation at the elevated levels, I think, was predicated on the ability to repeat sort of world-beating deals, and it was trading actually at a premium to the underlying NAV at some point. It has now moderated. We've got it at about 4 to 5% discount to NAV. That's based on market valuation. So it is moderating. I think really,
that's not attractive enough, though. 4 to 5 discount to NAV.
That's the point. You know, it is a big group. It should trade at a historical discount to NAV. So I think it could moderate a little bit from these levels, just given the valuation.
But what it has done is that it's put itself up a division in terms of its scale, and it has launched a European-based corporate debt program, so it can now fund transactions in Europe. And John Nodder's view is that there are plenty of badly run assets in that bigger pond that they can now go fishing for.
So they are going to drive
And
further
they've got a proven
acquisitions into
track
their
record
strategy.
in terms of finding and funding transactions of this scale. And so I think their intention certainly is to roll this thing forward into another era, utilising the current infrastructure and the funding capability.
Let's go hot or not on this one, Rowan.
I'm going to go not. I'd wait for more value to be.
Paul, hot or not?
I'm going to lean towards hot, and that's simply because with the combination of friends and connections that they have, I think they're going to see some interesting deal flow, and I'd be
We're
positive
going
on
then with
backing
a
them.
clear hot,
Yeah.
not leaning towards a hot.
Yeah.
That's very
Falling on
wishy-washy.
hot. Yes.
You are in the hot.
Well, we
hot
own
or
them
not.
as well, and that's always a good sign. Hot for sure.
That's it, good. I